This is the second in a series that we've been doing on global and regional energy security. We started a couple months ago, actually in July, with a session on Russia and Ukraine. We had an overflow audience, and it's great to see as we turn to China and Asia Pacific, we also have a similar audience here today, and we're touching on issues that clearly matter a great deal. Much of the energy debate, though Ukraine and Russia have certainly been in the center of the headlines recently, but much of the real changes going on in energy discussions obviously are happening in Asia Pacific. And so looking forward to a wonderful discussion here today. Jan Kaliski is, who you'll hear from in a moment, has been leading our energy work here at the center. We're very glad to have him here as a public policy scholar and as really the intellectual driving force behind our energy series. He co-edited a book on energy and security with David Goldwyn. Do you have a copy that we can float up to the audience? Wonderful book. I highly recommend it to you. It serves as the intellectual basis for the series of programs. We're trying to do something every 2 months on energy and security. So we're taking a regional approach, which is part of the strength of the Wilson Center, looking at each region, then we'll be putting it together again and looking globally at what are the trends in terms of energy and security for the future. And this fits perfectly because it also ties in with very strong work from the Wilson Center that has been going on for a number of years on Asia Pacific, our Kissinger Institute on China and the United States, headed by Robert Daly, who I'll introduce in a second, and formerly headed by Stape Roy, who is Ambassador Stape Roy, who's a distinguished scholar here at the center, our China Environment Forum that Jennifer Turner heads up, as well as our Asia program, and Shihoko Goto, who's probably around here somewhere, who has really been leading our East Asia work as well in that program. And this is an issue we've been looking at really rebalances, not the U.S. rebalance towards Asia, but actually rebalances within Asia for a long time, and sort of Asia's changing role among countries in the region and then vis-a-vis the rest of the world. And so this fits in extremely well. It's my pleasure to turn this over to Robert Daly, and let me just say Robert Daly is not only the director of our Kissinger Institute, he's been here about a year, but he's someone who is a pleasure to work with as a colleague. He's a great leader and a manager, but above all else, I've had the pleasure of listening to him speak 3 or 4 times now, and every time I hear him speak, I'm just impressed by his intellect and by the insightfulness of what he says. He's able to both say very deep things. I'm putting a high bar up here for you, Robert.
Yeah, exactly.
Say things that are both impressive and deep, but say it in a way that is actually accessible and can be useful to many of you who are in busy policy and non-governmental jobs. Let me turn over to Robert. And thank you to our panelists for being here. Thank you, Jan, for organizing this. And great to see all of our panelists here this morning. Robert, take it away.
Thank you, Andrew. The Kissinger Institute is very pleased to be able to co-sponsor this event with the China Environment Forum and the Asia program here at the Wilson Center. We have titled it, perhaps overly alliteratively, Platforms, Pipelines, and Policies, Energy and Security in China and the Asia Pacific. Lester Brown at the World Watch Institute, who is actually going to be giving a program here on September 30th to mark the 20th anniversary of the publication of Who Will Feed China. Lester Brown is famous, for, among other things, for having said of China, 1.3 billion times anything equals a whole hell of a lot. China needs fuel in the form of food for the Chinese people and in the form of energy for China's continued development, is one of China's top priorities, domestically as well as internationally. Internationally, at the same time that China is seeking more fuel, China desires greater political influence, particularly in its periphery. So one of the major questions we want to look at today is what is the relationship between these two international imperatives for China, behind its quest for fuel, again in the form of food as well as energy, and its interest in expanding its influence or power. If you've been following the articles written over the past few years about the East China Sea, the Diaoyu Senkaku problems, and the South China Sea, often in paragraph 3 or 4, there's a throwaway line about these waters are thought to contain perhaps vast amounts or less vast amounts of oil and natural gas. It's often a throwaway line. I think that over the past few years, these disputes have come to be viewed as being more geopolitical, being more driven by politics than they are by China's quest for natural resources. But there's clearly a relationship between these two imperatives from the Chinese point of view. We saw this in July when China dispatched a deep-water drilling rig to waters that are claimed both by China and by Vietnam as part of its exclusive economic zone. And just 2 days ago, Monday, the China National Offshore Oil Corporation, or CNOOC, announced its first deep-water natural gas discovery in the South China Sea, a potentially vast field discovery made by the same rig that just left the waters that are also claimed by Vietnam. But this field is not in a disputed area. It's clearly within China's exclusive economic zone. So clearly this linkage, which we hope to understand a little bit better today, between the quest for fuel and the quest for power is going to continue. And we are delighted to have with us today 4 experts, each of whom will spend about 5 to 7 minutes in their initial remarks. And I'm going to be a harsh taskmaster on this so that we have time for dialogue with the audience as well as with each other. First, Jan Kalicki, who is a public policy scholar here at the Wilson Center and is co-editor, as Andrew mentioned, of Energy and Security.
Hold that high.
Hold this high. There are order forms, I think, out on the table. And there are, this covers energy and security issues worldwide. Today we're focusing on China and Asia Pacific. Unless this sounds like a dry topic to you, I was very struck by the epigraph. There are 2 epigraphs, one by Mark Twain, 1860, and one by Bob Dylan, 1963, and Jan managed to make the epigraphs actually rhyme. They scan between these. He has appropriated Mark Twain into the times they are a-changin'. So this is a lot of thought has gone into every aspect of the book. No mean feat. No, it's only in English, but you managed to bring Dylan and Twain together. So well done. We will then hear from Amy Myers Jaffe, who is Executive Director of Energy and Sustainability at the University of California at Davis and had previously been at the Baker Institute at Rice University in Texas. She'll be focusing on the China side of the equation. We'll then turn to Michael Herberg to talk about Southeast Asia more broadly. He is the Research Director of the Energy Security Program at the National Bureau of Asian Research, which is based in Seattle, but is also right across the street from us here in Washington, D.C. He is also a senior lecturer on international and Asian energy at the Graduate School of International Relations at UCSD. Welcome. And then last in the formal presentations, we will hear from William Eichord, giving us a view from industry. He is Vice President for International Government Affairs at ConocoPhillips Corporation and has long experience both in the energy industry with various companies as well as in government. We are sorry that Amos Hochstein, who was to have been with us today from the Department of State, has been summoned on short notice to a meeting on the Middle East and so is unable to join us, but we hope to bring him back at a future event. So with that, again, welcome, and I will turn it over to you, Jan.
Well, thank you very much, Robert. It's a privilege to lead our regional and global energy series here at the Wilson Center and to be joined by such a terrific panel. We're now in the second printing of the second edition of the book, which is entitled Energy and Security, Strategies for a World in Transition. And I'm delighted to see other co-authors joining us in the audience, including Leon Firth and Robin West. It's really an effort that is a continuing effort involving the authors, and that's why we are doing, partly why we're doing this series, to be able to address the issues that are in the book and to be able to update ourselves on those issues. We decided on a second edition for 2 main reasons. First, the world of energy has changed in a revolutionary way. Past presidents had to content themselves with trying to manage what seemed to be the remorseless growth in U.S. and Western energy dependence. Future presidents can lead an almost equally radical growth in U.S. and Western energy production. Second, the world is consolidating not just in oil, but in natural gas and other forms of energy. What happens in Ukraine impacts all of Europe. What happens in the South China Sea impacts all of Asia. But it's more than that. There is no such thing as an isolated energy disruption. Energy pricing is globally driven, so the U.S. market will feel the impact no matter how much we produce here at home. Unfortunately, despite some progress, the U.S. still lacks even a coherent national energy policy. So much is fragmented among federal and state government agencies and multiple committees of Congress. Yet what we need is not only a national, but a global policy, and that is what our second edition seeks to set forth by delineating a global energy security strategy, or what we call GES. GES involves 5 main initiatives. First, to propagate the unconventional energy revolution abroad. Second, to create a competitive global gas market. Third, to forge greater coordination of emergency response measures. Fourth, to lead a multilateral effort to end energy poverty. And fifth, to commit to global engagement and protection of sea lanes. Our panelists will be talking to us about the challenges of getting to guests in China and Asia Pacific in terms of platforms, pipelines, and policies. It's clear, for example, that Chinese energy platforms and pipelines can have a critical impact on energy and national security dimensions, as they do for China's ever-growing need for energy in all its forms. So I look forward to a robust discussion, and we'll turn over at this point to Amy, who will consider energy security from the Chinese perspective. Thank you, and over to you, Amy.
Well, thanks very much, Jan, and thank you to the Wilson Center for having me here today. Very interesting times in the energy world, a lot of incredible innovation in shale, which I'm sure Bill will talk about. But in talking about China today, I thought I'd make just a few basic points, and then we can have a discussion and go into more detail. I think that first and foremost, in thinking about how China views the energy world, in light of the shale revolution, one has to remember that for China, this is a shocking development in the sense that they went from being in the same situation as the United States, going to be a major importer, and we were going to be a major importer, to suddenly having this reality that they're going to have this great economic disadvantage and geopolitical disadvantage to the United States, where previously they were worried about the United States controlling the sea lanes for energy trade. Now they have to worry about that on top of the fact that the United States is going to have its own energy and is not going to have that same disadvantage of relying on heavily on imports from the Middle East or Russia or other places in the same way. So the Chinese government is very concerned about that. As Jan mentioned, and I'm sure other panelists will talk about, they're trying to make a big push to try to get the Chinese shale off the ground. Shale is one of those things you can't control it. It's very hard. Every basin has going to be maybe a different technology solution. And so finding the exact technology and techniques that are going to work in China, compared to South Texas or the Bakken, is something that's very hard to predict the pace of success. I would say my opinion is, having watched the industry over the years and even watching the Chinese industry over the years, it's one of those things where they will eventually be successful. I don't think it's accurate to say that it's just going to be too hard or there's not enough water. If it turns out there's not enough water, the industry will come up with a way of doing it in a waterless fashion in China, just be more expensive there. But what the Chinese are doing in the short term is trying to leverage what they do have, which Jan made allusion to, which is this giant market. So if you're China and you know you're going to have this rising demand and you're going to have to increasingly rely on imports, at least you could leverage your position as being the biggest purchaser in the market. And when you look at all of China's policies, whether it's their policy towards U.S. LNG exports or whether it's their policy towards Russia or their policy towards the Australian projects for LNG and their pipeline policy around the Caspian and other potential pipelines that could come to them. Their big thing is how do they leverage their powerful position as what being perceived as the only growth market out there. Oil demand is expected to fall in the United States. At the same time, we're going to have rising supply. European demand is flat. Might even, same thing, be declining through policy and efficiency. And so the two big markets for growth are going to be, ironically, the Middle East itself consuming more of its own energy. So the whole world, if you're a LNG producer in Australia, if you're Qatar, if you're Saudi Arabia, if you're Russia, and you're thinking about where are you going to sell your future oil and gas, you are 100% focused on selling it to China. And when you explain to analysts like myself or to people in the global market, or if you were here giving a speech, you would explain that the price of oil and gas is not going to fall over time And your reason would be because the demand in China is going to be so high. But with everybody in the world going to court the Chinese to buy their oil and gas, if you're the Chinese, well, that gives you leverage in trying to make demands about pricing terms, right? And so you saw in the announcement of the Russia-China natural gas pipeline deal, China really leveraged and squeezed out the most attractive price they possibly could before announcing that they would consider that pipeline. Then they go back with that announcement that they might do a pipeline with Russia, and they go back to everyone who's trying to sell them liquefied natural gas, and they say, okay, well, you're going to have to be competitive with the following very low price. And you're going to see this negotiation go on all the while China's hoping in the back of its mind it's not going to have to buy any of this because they're going to be able to get their own shale off the ground, right? So they have a very important role. And they also have an important role in two other ways, which I'll mention just to sort of kick us off, and then we can talk about it a little bit more. The second way they're going to be very important is they have gone out and loaned money to everyone that's a major oil producer. Not everyone, because some of the oil producers don't, but anyone who had financial troubles who's a major oil and gas producer is in debt now to China. Venezuela has a $60 billion debt to China. Russia's Rosneft has a $20 billion debt to China. Many of the African nations have, millions, if not billions of dollars of debt to China. And so in some cases, Iran, has been giving oil and gas to China, or mainly oil to China, for IOUs because because of sanctions. They have this big, giant, IOU account. So in effect, this past year, China has been getting a lot of oil, I call it, for free. Because I gave this foreign aid years ago, and now all these players have to give me back the oil for free to pay off their lending. So in the case of Venezuela, I don't understand how the regime there, how the government there actually survives because they're giving so much oil to China. But in the case of Russia, this is also a huge pressure point because they're having to give this oil for non-payment to China. And in the case of Russia, if the Russians continue on this path of trying to show that they don't need to sell their oil and gas to Europe because they're going to shift more and more of it to China, which is a little bit physically impossible, but to the extent that they do new developments to orient toward China, they're going to become more and more financially indebted to China. And they're going to become less and less able to be an independent country of China as their debt situation in China becomes more strong over time. And that's something that the Russians have to calculate in thinking about their boldness towards Europe. And then the final point I would make is that all of that Chinese market progress is contingent on the idea that, number one, China won't actually be able to develop its shale quickly or to a large extent, because if they do, all of these countries that think they're going to be selling to China are going to find that they're not going to have as good a market to go to. And the second thing is the Chinese are initiating, after sort of a shaky start, a whole program on new energy vehicles is how they describe it. So they are adamant that they have to continue to lower the demand for oil for their transportation sector. And they are looking at electric vehicles. They just signed a joint venture with University of California, Davis, and the state of California to try to help them figure out how to propel their EV policy in China. We've worked with them a little bit on natural gas and transportation. There's 1.7 million natural gas trucks and taxi cabs in China. That seems like a large number. It's a small number for China, but the potential there is really huge. So they're also trying to take policies that would constrain the upward path for oil demand in China. So you have those two things as sort of like a balancing out to the geopolitical activity that they're taking in the beginning right now in the early stages when they're trying to contain their exposure on imports.
Thank you, Michael.
I'm live. Well, I want to thank Jan for inviting me and the Wilson Center for bringing me here. But you know, it's a really thankless job to follow Amy Jaffe. That's not something I enjoy. I look forward to doing or try to do very often. She's always independent, thoughtful, and terrifically articulate. So it's a tough act to follow. So you know, I'll do my best. Jan asked me to talk more broadly about Asia and kind of geopolitics and energy overlap, and focusing then down on the South China Sea. So I'll just throw some comments on, get some things on the table around the region. First, you know, just a few words about Japan and energy and kind of sea lanes and geopolitics. Everything in Japan today, energy-wise, is dominated by the fallout, that's not meant to be a pun, from the Fukushima disaster back in March 2011. It's created what really Japan feels is the third energy crisis for Japan. Fuel costs for power generation have doubled. Power rates have gone up. The Japanese utilities are hemorrhaging cash because of this. The balance of payments has gone deeply in the red because of having to import LNG, expensive LNG and oil. It's led to an enormous binge in imports of LNG from 70 million tons to 90 million tons, really a shock in the Asian LNG market, and driven up prices for LNG, which has aggravated Japan's problems even further. So LNG energy security has become the watchword for Japan today, largely because of Fukushima and uncertainty around the restarting all the nuclear plants, and we can talk about that. If we think about where, as we go towards the South China Sea or the sea lanes and energy related to Japan, you have a gas field dispute between China and Japan, the Chunxiao gas field, but I think that's been simmering for a number of years now. If you ask me, is energy a critical piece of the China-Japan relationship or the issue over control of territory, I don't think it's a big part of that. I think this is basically a geopolitical battle over control of territory, the maritime territory. I don't believe energy is a big piece of that. Now, the other part of that, I would say, though, for Japan is control of those energy sea lanes. Because remember, it imports 99% of its oil supplies, 90% from the Middle East. All of that comes through the South China Sea, the East China Sea. So for Japan, if it doesn't have direct territorial energy-related issues with China, it certainly has a vital interest in control of those energy sea lanes coming through Asia. And clearly that's an increasingly important set of frictions, tensions between China and Japan, beyond and above and beyond the Diaoyu Senkaku Islands dispute, which is obviously an important one. So if you ask me, is it a big part of the Japan-China relationships, I think it's the sea lanes and control of those sea lanes in the long run as China's blue water Navy capacity grows very rapidly. Let me talk just a little bit about Southeast Asia, get a few issues on the table there. Again, if you ask me, is the maritime territorial pushing and shoving in the South China Sea region driven by energy? To what extent is energy a piece of that? I think it's 95% geopolitical. Again, it's about territory, it's about sovereignty, it's about historical claims, it's about the rise of China and all the regional readjusting and pushing and shoving, trying to adjust to a much more powerful China. And so I think this is simply part of the symptom of that. Now, it does have the effect, I think, of raising the stakes. At the margin, to the extent you believe there are large oil and gas supplies in the South China Sea, and this is about belief as well as real data on what's potentially out there in the field. But to the extent you believe there are large resources there, I think this does have a multiplier effect on the territorial disputes. And I think the other piece of this is that China and Vietnam and the Philippines and several others are using oil blocks, offering blocks, drilling in certain places as markers for their strategic claims. So it's not that energy is driving it. Energy has become a tool in marking your strategic claims. Obviously, the Chinese rig 981, putting that offshore Vietnam, that wasn't about looking for oil and gas, really. That was about putting out a marker. The Vietnamese have awarded blocks out beyond into territory claimed by the Chinese. The Philippines are beginning to do that kind of thing. So you're seeing actually energy being used as a tool in the strategic battle, I think, much more so than energy being a driver of that. Although at the margin, I think it is has a multiplier effect. And, we can debate that. I mean, the probable resources in the South China Sea, if you listen to USGS, was 11 billion barrels potential, I think, with USGS statistics, and 180 trillion cubic feet of natural gas. Now, that's wildly speculative because nobody really knows because there's not a lot of drilling going on, obviously, in all these contested areas. But it's a gassy region. It's not really been an oil-dominated region. 11 billion barrels is hardly something to be going to war over that large a region, and it's split up amongst various different territorial areas. So 180 TCF of gas, yeah, that's a lot of gas. But remember, it's split across the region, and it's hardly a reason for each countries to be going to war. So I think it's really a multiplier effect. The Chinese clearly believe there's more there. I think that's one factor here. They believe there's a lot more oil and gas in the region. So, it can be a more significant driver if you believe there's a lot more there. But my view is it's a multiplier effect. Just a few last words on Australia to cover, to fill out the region. The Australia-China relationship obviously is driven enormously by resource trade. And China is a huge market for Australian coal. It's becoming a huge market for Australian LNG. And those ties, that relationship being built on mineral trade, but in particular on energy trade, are drawing China and Australia closer together, obviously. And this is creating a huge debate in Australia. The very close historical alliance with the U.S., but this constant gravitational force of the Chinese market and the prosperity of the Australian economy coming from selling larger and larger amounts of energy to China so Australia is deeply conflicted, and they're going through a real national debate today about the value of the U.S. alliance, how closely they should align with the U.S., over how much they should balance between China and the U.S. and the Western Pacific. And you have people like Hugh White, if any of you follow this debate.
He's spoken here within the past year.
Yeah. Hugh White is very articulate in the position that the U.S. is going to have to concede a space of strategic range for China in the Western Pacific. It simply has no other choice except for the choice of conflict, direct conflict. And Australia really needs to have a much more arm's-length relationship with the U.S. and not simply throw itself into the U.S. camp and get pulled into that long-term struggle. So a few words about the Australian piece of that. I think it's interesting. With that, I'll turn it over to Bill.
Great. Thank you. So I'm with ConocoPhillips, and Jan, when he approached me, this is what happens when you ask somebody for a copy of the book for free, is you get put on a panel. But I'm honored to be here. Thank you very much, and I'm also honored to be with my other speakers here today because they are renowned experts in the field. I'm going to focus this down just a little more narrowly on the question of the shale gas opportunity in China, and kind of where that stands a little bit, because it's there's a lot been written on it, but we're actually there doing some work on it. Just a very brief, for those of you who may not know ConocoPhillips, we are the largest U.S. independent oil and gas company. We've been operating in China now for over 30 years. We've had a couple of big projects there, the Panyu project and the projects in Bohai Bay, Penglai. And now we're working with, and both of those we're in partnership with CNOOC. we're now working in the Sichuan Basin in a study agreement with PetroChina, CNPC, and we're kind of in the middle of that study agreement with them, where we're looking we're looking at the shale gas opportunity. So it's giving us a good chance to examine firsthand what's going on. We also, just sort of fill out the dance card of what we do with China, we also have a collaboration with Sinopec in our Australia Pacific LNG facility, where they are a 25% owner and will be the major offtake partner for the gas that will be produced, or the LNG that will be shipped from that facility beginning in 2015. So it's a very, it's an in-depth relationship. It's an important relationship for our company. So the questions, I thought I would try and focus my comments, and maybe a little bit in comments and Q&A, on three key questions. I'm asked all the time, because we're a company that's been quite successful in the Eagle Ford Shale and the Bakken and some of these shale basins in the United States. I get asked all the time, well, can you replicate that out of North America, outside of the United States? Can it be replicated in Eastern Europe, in Australia, in China, and elsewhere? And that's a key question. And so I want to focus a little bit on what has been the role, what has been the success case, and why in the United States. Secondly, what is the role of innovation in this process? And why is it important, secondarily, to the China piece of this? And then finally, what will lead to success in China? And I have a couple of modest recommendations that could be considered. So on this first question of success in the United States, now I'm going to assume that many of you here are not industry experts, so for those of you who are, my apologies for stating some of the obvious points. The success case in the United States, especially in shale gas, has been grounded on several things. First of all, geologic opportunity. Secondly, a lot of the development has occurred on private land, not on public land. So it changed the nature of what we can do, the rules of the road. I mean, there are federal and state and local regulatory requirements that are all met, but at the same time, having some flexibility on how you pursue your contract and the methods you use is important. Attractive physical terms are important. Extensive infrastructure. I mean, if you look at what we call the spaghetti map of the United States, it is extensive. Not only the long transmission lines, but the gathering lines, the distribution lines. It makes, for natural gas certainly, a much more robust case. You do not have to replicate infrastructure. Importantly, a large and modern and safe drilling fleet. The rigs are there. They're accessible. This has been particularly an interesting question when you look at Eastern Europe. Do they have rigs? And how many of them can you go about what in effect is a manufacturing process in shale gas development, where you're moving a rig from here, over and over and over again to do things. Is there a skilled workforce? Oil and gas industry workforce, and a service industry, a developed service industry in the area. And then, of course, what's supporting infrastructure, roads and electricity, all the things you need to have, a fairly robust system. Amy mentioned the question of water. I mean, water is an issue. People are looking at technologies that would require A, less water, and B, no water. But that's still early days. So we're still reliant on using water for the hydraulic fracturing process. So the next thing I wanted to mention is, so that's kind of why the success case in the United States. But what's the role of innovation? If you look at, we've only really been at the shale gas business for about 10 years. I mean, hydraulic fracturing has been done for 40, 50 years. But the combination of this horizontal drilling and hydraulic fracturing is a more recent phenomenon, beginning in the early 2000s. Started with shale gas, now in the tight oil areas, and in fact what we're seeing in a lot of the companies that are working in this space are looking very specifically at the liquids side of the equation because of the market conditions. There's a lot of gas in the United States, prices have dropped, and so the liquids are more valuable, and that's what we've been pursuing. But what's gone along with that is a substantial amount of innovation and technology development and experimentation. And this is kind of a critical point. The experimentation of how many, what's the spacing of your wells? How are you going about your exploration program? You have to look, we've gone through a lot of testing and innovating to get the best yields, to get the best production rates, and to lower the costs. And to give you some idea, just in the past 5 years, the statistics that we've compiled, nearly 40% reduction in number of drilling days because of technology advancements, a 40% reduction in the completion unit cost. 75% of the wells now benefit from pad drilling, which is the ability to do multiple wells from one pad, which also, of course, is a good thing from an environmental standpoint because it lowers the footprint of the overall operation. And then finally, just using different drilling and completion technologies. I don't know that technology well, so I'm not an engineer, so I'll leave it to somebody else to explain those details to you. So now the question, final thing I wanted to say was, what's the basis for success in China when it comes to shale gas? We know they've got shale gas. It's spread out. There's lots of different basins around the country. There's been a lot of debate about, well, are all the basins equal? The answer is no more than they are in the United States. The basins in the United States are all quite different, and Amy correctly pointed out, it will require innovation and testing and greater knowledge about each one of those basins. The production sharing contract system in China over the last 3-4 decades has worked very, very well for conventional completions, for conventional type of oil and gas development. The question is it the right, is it tuned up to be the right vehicle for shale gas? And the answer to that, in part, I've laid the predicate for that by talking about the innovation and technology. We think that there can be adaptations to the production sharing contract and what's called the operating development plan in China that would significantly help the incentives for people to invest and people to pursue shale gas. And this is a dialogue we're having very constructively right now with the Chinese ministries that are responsible about the flexibility needed to pursue a shale gas opportunity. When you're looking at a conventional system of drilling, you're looking at, you take a picture of the ground in simple terms, you identify where you think the oil and gas is in a conventional well, and then you go drill that well and you either find oil or gas. In shale gas, you're trying to determine a lot of different aspects of what the resource looks like, because you're talking about the ability of the shale to crack, to frack, and to fracture, and the various depths, the lengths, all these sorts of things. And so this question of well spacing, the question of recovery rates, all becomes very relevant to the economics. We think what's something called what we would refer to as a rolling ODP, or a rolling operating development plan, would be an appropriate adaptation to the model that has been used in China and could lead to a more successful overall program and bring shale gas online more rapidly. Secondly, major question, the market pricing and how that is done in China. And a question that is currently under discussion right now is how will investors have access to the government promulgated city gate prices for natural gas delivery with transparent transportation tariffs to deliver the gas to these markets? Very critical question. Yeah, and one final point, and I'll be done. And then finally, and this is particularly relevant to foreign companies, but will there be equal access to the data that is already in place? There is some data available, but trying for each company to replicate the technical data on what the resource looks like is costly, is time-consuming, and to the extent that that is available in the ministries, having equal access to that data is an incredibly valuable part of the process here, and indeed part of the partnership that you would expect to have happen if you're making an investment. So I'll stop there and leave the rest for questions.
Well, thank you for your very broad and very balanced discussions. I think that in the media, there's an implicit accusation that China in its search for energy, it's a sort of rapacious maw that they're going out and taking over the world. And I think it's good to be reminded, as you have today, that these are needs. China is trying to fulfill human needs in the same sorts that we have, and that needs to be the baseline against which we understand it. I do want to ask one question about U.S.-China relations. And you alluded to China's interest in the sea lanes and perhaps protecting them. Japan has the same interest. A few weeks ago, President Obama called China a free rider, a sort of accusation that had been made before, and there have been reports that this time in particular, Xi Jinping was not very happy about this. And the suggestion is that China, commensurate with its power and its wealth, needs to be providing more public goods internationally. And as you said, America now is defending perhaps the sea lanes upon which China is more reliant than we. My Chinese friends, when they hear this, feel that they're damned if they do and damned if they don't. When they don't step up, they are called a free rider. And if they, for example, continue to develop their Blue Water Navy's capacity to not only fight piracy off the Somali coast, but actually to provide security in the Middle East, they are then called a hegemon, a neo-imperialist. There's a whole list of names. So against that background, what is China's willingness, do you think, to step up and to provide more security for the sea lanes? And how willing are we to countenance or welcome an enhanced role for China and perhaps a reduced role for ourselves?
So let me take that fundamentally. I think there's two things you have to look at. The first thing that I hear in the same kind of dialogues when I'm in China and talking to our own military is that even if you take like a worst case scenario like the Cold War, right, we always had a consultative policy with the Russians. So to the extent that China is going to be more active in the sea lanes, to the extent that they are engaged with us in anti-piracy, joint exercises in and around Africa, there needs to be a high level of consultativeness between the Chinese military and the U.S. military, on a level that's probably more elevated than it is today, so that there isn't misunderstanding, right? You want to get it so that if China has a key strategic interest and it needs to move vessels in a particular place, that they would consult the United States and vice versa in the process, so that there isn't like an escalation or misunderstanding and places where there we have allies that have territorial worries. But on the free rider question, I think it's very complex. And I would frame it in a slightly different way, and my Chinese friends don't like it when I frame it this way. So the United States is spending a lot of money and a lot of effort in trying to not only police the sea lanes, but keep the Middle East stable, and maybe China doesn't agree with the way we're going about doing that. And that's something that's been part of the U.S.-China dialogue. But one could certainly say that the Chinese have not played a constructive role. And by not playing a constructive role, I don't mean that they don't send diplomats out to help ease with conflict resolution, because that would be great if they would do that. But they're doing the worst. I mean, they're feeding the conflict, right? And I have a more controversial belief probably than many people who look at the U.S.-China relationship, because you could say, well, China's doing that because they have strategic interest in doing that, or they disagree with U.S. policy, or whatever it is that people would say. I say they do it on purpose, specifically to weaken and tie up the United States. President Obama can't make the so-called Asian pivot if he's busy going after ISIS and dealing with Russia and the Ukraine. So China takes policies in terms of, arms sales or other kind of support at the UN for Iran, or they're not on the sort of constructive side of working out an international conflict resolution pact for Syria. They always seem to be sort of on the unconstructive side of the question, and then the United States has to step in. And we're being, we get drawn into not only the diplomacy, but we get drawn into the sort of policing aspect of these conflicts. It took China a long time to realize that it wasn't actually in its interest to have this giant conflict brewing in Sudan for years and years. So I think when the president talks about the free riding, is he actually talking about having the Chinese Navy go out and do some of this? Maybe he's not really secretly thinking about that, because that is sort of a difficult challenge to navigate. But, you know, it's also about China playing a leadership global role, which they say they want. But then when you see these big conflicts, you don't see them playing a constructive role, not on the Russian-Ukraine question, not on conflict resolution in the Middle East. I mean, they're not stepping up to global responsibilities.
I'd like to give the panelists a chance to respond to each other, ask each other questions before opening it up to the audience. Any other thoughts?
Yeah, I just wanted to follow on what Amy talked about in your question. You know, we're doing a whole 2-year study at NBR really related to this, all the changes in the U.S. and the impact on Asian energy security and control of the sea lanes and stability in the Middle East, and how you forge a more collaborative approach, because it's going to be increasingly up to the Asians to take care of their own energy security. We can go through a long dialogue about that. And then you immediately go, well, what are the prospects for Asia collaborating? The key Asian importers collaborating on sea lane protection and potentially even the really nasty job of trying to stabilize conditions in the Middle East. Then you look at the relationship between China and Japan as it stands today strategically in terms of cooperation. Japan and Korea strategically today, China, India, U.S., China. And you go, this is going to be a really challenging thing to try to forge a collaborative approach between particularly U.S. and China towards security of those energy sea lanes. And how do you do that? I think the problem in U.S. and China is that each side is conflicted in that it depends on who you ask in Washington, is it a good thing to have China helping in secure the sea lanes to the Middle East and to Asia? It depends on who you ask. You know, some people think it's a good idea. People at PACOM today are continuing to talk to China about those prospects. But a lot of people think, well, the last thing you want to do is get the Chinese involved in guarding that those strategic sea lanes. Same thing as in Beijing, you know. Some people argue we should be more powerful in the Middle East. We have vital interests out there. The U.S. power is declining. We should be a bigger player. And then you get the other side. We don't have the capacity to do that. The last thing we want to have happen is being dragged into this morass of Middle East politics. So I think both sides are deeply conflicted. So how do you craft a collaborative atmosphere when each side hasn't sorted out how it views this?
Yeah.
I might just build on what has been said by mentioning two things and asking our panelists to address them. One is, we talk always about governmental consultation, but there is a very interesting industry process, the U.S.-China Oil and Gas Forum, and perhaps, Bill, you could talk about that and other such industry consultations, and how far have they gone, and how much further could they go to help develop this collaborative element. And the second thing that I'd like to do is to challenge a little bit both Amy and Mike on this question of whether energy is simply a geopolitical dimension or whether it's more of a driver. It seems to me that the role of perceptions is understated here. Yes, it may be objectively the case that geopolitically that's the major factor, but it seems to me that when you add in the ASEAN dimension and you think about the perceptions of natural resources as very important by the ASEAN countries, as well as, of course, by China and Japan, for the reasons that you mentioned, that it is more of a balance between the energy driver and the geopolitical driver. So I wanted to push back a little bit on that and see what you think of it.
It's succinct answers so we can get to the audience as soon as possible.
Right.
Thanks.
Since you directed the one to me, I'll just take a stab at that and maybe link it a little bit with the last discussion, which I don't want to get into in terms of the discussion of the sea lanes. But I guess one thing I would observe is I'm not sure it's the right question. The right question is if the question is, you know, how to defend the sea lanes, that's one thing. But is the question, should that really be the question? Should the question be more about how can countries draw themselves closer together? And in terms of the inevitability of that, and I guess from the business standpoint, you know, we're more focused on some fundamentals, which is if countries are trading with each other, they're probably not, more often than not fighting with each other. There may be commercial disputes, but you know, they're enhancing their overall relationship. And so, you know, I look at it from the standpoint of saying, you know, there are different ways that we hopefully can pursue, you know, what happens, assuming the TPP agreement, you know, is brought to its fruition and passed by all the respective governments. You know, does TPP become a platform for a dialogue on economic trade with China as well? You know, 2 years ago, it's been very interesting to watch, because 2 years ago, there was appeared to be very little interest on the part of China to join the TPP, but they have more recently made some overtures to say, yes, we might be interested. At the same time, they've been negotiating their own trade agreements and a more general pact within the Asia-Pacific region. So that's sort of first point. Second point, I think your point about the U.S.-China Oil and Gas Industry Forum is actually occurring next week in Denver, Colorado. You know, this is, I think, in the 14th year of this dialogue. And so some of the subjects that I just talked about in my brief remarks are, you know, will be discussed in depth next week. And those kind of forums are extremely important in terms of just understanding each other, trying to work on common problems, and working for win-win solutions to problems. The third thing I would mention, and this is more from a private sector standpoint, and that is there are a multiple of track 2 dialogues that go on between United States corporate executives and Chinese leaders, some NOCs, some former government officials, et cetera. Those are incredibly important because, you know, I think it's absolutely incorrect to view China as, you know, one mind on everything. You know, there are a variety of voices in China just as there are a variety of voices here. And I think that, you know, there are a lot of folks who within the apparatus and the business community in China that are, you know, looking for ways to improve their system just as we're looking for ways to improve our system. So I'll stop there.
Let me just add to Jan's provocative question. The United States has an interesting choice path today that no one's brought up yet, so I'll throw it into the mix, which is U.S. oil and gas exports. Mm-hmm. Right? So to the extent that the United States wants to lower energy pathologies in Northeast Asia, or, you know, pretty much anywhere, I would add, also in Europe, right? To the extent that we use the opportunity to export our oil and gas, that gives us the platform to which we can talk to countries about taking a more peaceful and cooperative approach to the global system for energy trade, right? Because we're not hoarding our own supplies here to help, you know, 2 guys in the petrochemical industry. We're looking at it as a global industry, and we're seeing our role as a positive force in price formation, in competitive markets, in open investment. You know, China and all the other national oil companies are coming here to drill in our shale together with companies like ConocoPhillips and learn from operating in the United States. And we want other countries to do the same thing. We want to be able to have open investment in China. We want open and commercial investment in the Middle East and in Russia someday if they could get their act back together. So the point is that having a proactive policy where we view energy as a global commodity, where countries don't hoard or block or ban access is our goal. And if that's our goal, then even if it costs a teeny-weeny bit more to U.S. energy consumers, which, you know, modeling has shown would be like pretty small, it means that we need to export as our oil and gas production rises, and to the extent there is a commerciality to exporting, then we probably need to step up to that plate and be able to use our export. So, you know, I've done studies together with the Baker Institute and Harvard that show that if the United States in a high export scenario, a lot more trade would go to China. They would buy less, actually, oil and gas from Russia, for example. And the irony is, if the United States would export more, China winds up needing to develop less of its own shale because the market price for global LNG would be low enough that it wouldn't be, some of the Chinese shale is very expensive, wouldn't be that attractive to invest in it. But the United States exports under a liberalization scenario in Europe, for example, say Europe would continue to reform its sector and have more competitive and liberalized markets. Under those scenarios, the need for Russian energy in Europe goes down about 13% of market share, which is considerably lower than today. So having the United States take a free trade attitude about energy, I think would go a long way to setting us on a leadership path that would dent the pathologies that Jan is referring to.
I just, 1 minute. I think you're right that energy security and the anxieties about access and cost of energy in particularly Northeast Asia is an atmospheric, zero-sum atmosphere that overlays all this in energy. So, and I think that does affect the geopolitical environment by reinforcing the strategic rivalries in the region between China and Japan. As China expands its energy, this giant sucking sound we talk about, there is a perception in Tokyo and Seoul and New Delhi and around the region that this is just reducing everybody else's access to future supplies and raising the cost. And this really gets the Chinese worked up when they hear this. And so that perception, I think, is there, an overlaying thing. You don't see it actually manifest itself specifically in a lot of ways. That's what I was kind of talking about. But this overlay, I think, that is a toxic element in the regional set of rivalries in geopolitics.
Thank you very much. We'd like to open it up now for questions. We have microphones on either side of the room, so please just raise your hand. Yes, right in front, if you have a question, and let's go for short questions and short answers to give as many people a chance as we can, please.
Name and affiliation.
Yes, if you could tell us too where you're from and who you are. There's a microphone coming for you.
Thanks. Ella Cho from the Brookings Institution. I'm surprised that India is only mentioned once by Yang on this panel. So I'm just wondering, in the light that Xi Jinping is in India with Modi right now, how do you see the India-China relationship going forward? Where do their interests converge on energy and where do they clash? And how do you see the trend in the medium term? Thank you.
Maybe to focus on the energy part of the question and what a rising India does to some of the equations you'd mentioned earlier that where India hadn't figured in.
Well, I mean, India, India is going to be the number 2 place that if you have unsold LNG and unsold oil and gas, you can go. And of course, India and China have play into these same geopolitical rivalries that the panel's already discussed. And India also is trying to see if it can develop its own shale, though there's been some, less success than people had hoped. So I think that it's a very comparable picture in the sense that, like many things, if China were to be successful in developing its shale, then a lot of the LNG that is currently going to go to China would wind up being able to go very commercially to India. You might find that Middle East, Qatari, and if the Iranians ever get into normalization with the international community, a lot of those supplies would work well into India. So they do see, themselves as competitive with the Chinese. You saw for many years the Indian national oil companies would go out, and if China was bidding to buy acreage somewhere or to take over some kind of asset, India was in their bidding as well. But I would say in the case of India, they were much more commercial. So in China, if we're desperate to get involved geopolitically in an asset, whether it's Myanmar or some other asset, they would pay top dollar. It didn't matter whether what Chinese national oil company was going to be able to earn a profit or not be able to earn a profit, or at least not lose money on doing the activity. Whereas the Indian national oil companies are pretty commercial. Like, they were not going to outbid the Chinese just to outbid the Chinese. It had to make some commercial sense. So a little less elevating in the way that Mike was talking about, bidding up assets. but still very important, a very important market. And I think the interesting thing sort of moving forward is if you're a Middle East supplier and you see this sort of declining demand curve in the industrialized West, how do you want your alignments to go? Do you want to align more closely your interests with China as a rising market? Are you feeling that aligning yourself with India is geopolitically important enough to really focus on that market? How are people in the Middle East going to see these future markets and their relative weight in their both geopolitically, not just commercially?
Yeah, I'd just add one thing, is the Indian Ocean set of issues and the sea lanes. China is pursuing this new maritime Silk Road, is this the Silk Road, land Silk Road and the maritime Silk Road. And obviously this creates, there's ambivalence in New Delhi about do we really want to invite greater Chinese maritime involvement through the Indian Ocean towards the Middle East. You can see the commercial logic of this. It makes economic sense. China has enormous trade interests. On the other hand, there's this level of paranoia about bringing China into the region in a big way. So I think that highlights the ambivalence in New Delhi about what inevitably, 20, 30 years is going to be greater Chinese maritime involvement out there. So how do you shape that? How do you work to try to shape that? Because it's going to happen. The key is how will it happen?
I might just add on that India has been the dominant naval regional power. So the idea of, encouraging the Chinese to basically be, confederates with the Indians in this whole business, mixed feelings all around. And it just underlines the need for a serious strategic discussion, not only on the governmental level, but on the second track level that we were talking about.
Thank you. Let's go to this side of the room. Yep. Front and then back.
Hi, I'm Jeff Epping with Energis LLC. This question is for Bill Eichhorn. Mm-hmm. Can you elaborate a bit on the rolling operating development plan and its features that you see would work as opposed to something more static?
Well, it gets into the role of the operating development plan. When you do work in China, you have a production sharing contract, and then you file a plan of action and of how you're going to do that. And in a conventional system, it's fairly clear what you're going to be doing because you're able to identify up front, a certain number of well program and where you're going to put your wells and that sort of thing. In a shale gas kind of opportunity, you're going to learn things along the way about the resource itself that will then guide you as to where you take your next steps. And it also will very importantly, will guide you as to what parts of the block, because these things are usually geographic areas, of what parts of the block you will relinquish. So if you're, by sort of the nature of the unconventional resource development, you're going to do that differently than you would in a conventional block. So the idea of a rolling ODP is meant to sort of make that development plan relevant to a unconventional search for energy in contrast to the way you would normally do it in conventional. There are some maps I could show you that would kind of make it make sense, but you're in a conventional, you kind of start at a zone and you work outwards. In an unconventional, you're kind of working across the entire area and kind of narrowing then the scope.
Hello, my name is Jason. I'm from Johns Hopkins Science. A lot has been talked about shale gas and exporting out of the U.S. I presume that would be based on the pricing of the Henry Hub. Do you foresee that, because a lot of gas in Asia is priced in long-term contracts, do you foresee that there will be a spot market kind of benchmark developed in Asia, and where would it be? Thank you.
You've been working a lot on
Yeah,
this.
you want
thing.
me to- So I guess what I would say to you is, it's a issue in flux. So it's in the interests of the Asian buyers. The Asian buyers have been trying to get Henry Hub linked contracts, so still a long-term contract, but maybe more tied to Henry Hub. I think there's a tendency in the industry.
So for some of the non-specialists, could you tell us what that means, please?
So the Henry Hub is the spot market for the futures contract in the United States. So the idea is, in Asia, I have a 30-year or 20-year contract linked to oil prices, which right now is producing something like an $18 per MCF price to Asia, versus today's price in the United States is, somewhere between $3 and $4, been fluctuating. So, there's a cost advantage there. If you could take, say this winter isn't cold and there's a lot of natural gas in storage because of increasing production in Pennsylvania is increasing so much more than everybody expected. So some analysts are saying that the price of natural gas in the United States will average $3. In the coming next, 6-8 months, right? It's a pretty low number. So if you're paying $18 or $19 in China or in Japan, wouldn't you love to be able to get this, $3 natural gas? So there's a couple of different factors. The first and foremost is that it's going to cost you, if we even had an export terminal today built in the United States for LNG, it's going to cost you $5 by the time you move the gas from that terminal to Asia, right? So even if the United States price is $3, you're starting at $8 gas or $9 gas landed in Asia. But that's still a lot cheaper than $19. So, there's a couple of different things. Number one, sort of post-Fukushima, I think that people are not yet confident enough. I am confident that the natural gas market will be oversupplied as increasing over time globally. But if you're the Japanese, are you really confident that the natural gas market is going to be so oversupplied that you're willing to buy spot instead of having a long-term contract? I don't think we're there yet in Asia in terms of having most of the countries or buyers want to abandon the long-term contracts. So then you get into the question of okay, how much of a spot element do I want on my contract, and do I want what we call in the industry gas-on-gas pricing? Do I want to be linked to markers that are natural gas related, or do I want to be linked to markets that are oil related, and what's the appropriate mix? And I think that the market is evolving. And what I would say to you is that I think the market is even evolving away from the fantasy of having a 100% U.S. futures market linked contract, because people are seeing that, you have some crazy Arctic freeze in the North Midwest in the United States, and maybe even the United States price could be temporarily volatile. So what people are doing is they're having these mixed contracts. This percentage U.S. futures market, this percentage, some trading point in Europe, this percentage the Asian oil-linked, average price. And I think that probably for some period of time, until the market shakes out and becomes very, very liquid, which I do think will happen, over the next decade, I think you're going to see pricing at these sort of contract level, but at these mixed contracts that tap different international price markers.
Jennifer, sir.
Jennifer, it's being handed to you.
I thought you were stealing it first. Hi there, Jennifer Turner, Director of the China Environment Forum. Now, you guys all talk about oil and gas, and so I have to say coal. Because one of the things, I focus much more on domestic energy issues. And from where I sit, people are saying, well, we want this shale. Domestic Chinese, thank you. We want this shale and natural gas. People talk about a game changer for coal. But when I've had meetings, everyone says, well, no, the natural gas is not necessarily going to be replacing coal. And I was curious, since you guys have your hands more on the pulse, with this growing imports of natural gas, and from where you're sitting looking at where shale, where is this gas going to go? And, because is it do you this whole thing in the near term as being a game changer for coal doesn't seem to be it. So, will it eventually? I mean, it doesn't seem to be supplying to the power sector, is my sense. All this gas.
Well, I mean, the short answer is, I mean, I think that in the near term, it appears to me that if you look at, the growth in China, it's sort of an all of the above strategy, to borrow a phrase. And so I don't think, certainly coal is still going to be an incredibly important part of the energy mix in China. So the second thing, I think it's still early days in terms of the volumetric reliance on shale gas. Now, the Chinese government has set some targets in their 12th five-year plan for, and the, succeeding documents to that for shale gas development, but it certainly wouldn't, it's not going to be at the volumes of replacing in their energy mix, that high a percentage. And of course, imports of LNG are beginning to come into the market in a big way, and that will expand over the next few years as some of the big Australia projects come along, for example, and they provide to the market. But remember, it's still feeding into a growth in energy demand in the process. So, I think it's going to be very interesting. I guess my only answer is I think it's an open question. And as they approach sort of the discussion of the 13th five-year plan, how aggressively the government does look at the question of coal as a part of its environmental, increasing focus on the environment, what they do. And I think the story will be written around that as opposed to where we are today, if that is a fair answer.
Michael, do you have a comment?
I think, this is an enormous problem for China, obviously, and the role of gas generally. They have resisted moving it into power, bulk uses like that. But they've got that right now. They get that they need to move it into power. But as Bill said, this is, you got this growth curve, and you got wedges of pieces that are not coal being put into that, and their gas target now is 400 plus BCM for 2020, which is a quadrupling in 10 years if they could actually get there. So they've got the pedal to the metal on gas, but coal is going to be the default fuel for a long time.
I might just add, here again is an example of where the U.S. could put its real commitments where its mouth is. If you're talking, as Amy was earlier, about a free trade policy on oil and gas, and the U.S. were perceived by the Chinese as seriously interested in providing more gas, in catalyzing more gas exports into China, this could do a lot to help vis-a-vis our environmental goals. We're complaining all the time about China and coal, and the Chinese themselves would like to reduce their dependence on coal, but the economics speak for themselves. And the U.S. really has an opportunity here to play much more of a leadership position in reinforcing the free trade connection to both energy and environment.
Okay. Yes, sir.
Thank you. Dieter Detker, Georgetown University. I'd be interested in your views on the China-Russia energy relationship. Obviously, Putin is interested in opening up new markets and opportunities in Asia and China in particular, but there are infrastructure issues, and it will not be easy to replace Western Europe with China and Asia, right? Can you talk about that a little bit and how this is going to play out? Also, as China has, direct access to Central Asian markets too, and oil supplies. And the last point, I'd be interested in your comments on the possible impact on our sanctions on Russia over Ukraine on the oil market and what that's going to do. Is this going to create new difficulties in the oil market, gas market too? What's your take on that? Thank you.
So I would say on the China sort of Russia strategy, China's hedging. I mean, they're going to be able to get cheaper energy from different ways from Russia. I mean, they're not going to turn that down on some philosophical basis. It's taken a long time to negotiate out energy deals between Russia and China because China has certain goals. Like, I want to use this energy relationship to get incredibly inexpensive energy. and I want to have a geographic preference. So I want the Russians to produce a certain resource, and I want them to move it to a certain section of China. And of course, Russia has always been reluctant to accommodate that. Oh, and I want to have 30% investment, like Australia has offered. You know, I want to own it. And the Russians have been reluctant to do that because it's a bordering country, and they have some, you know, territorial issues. They have some geopolitical rivalry issues. So I think the interesting thing about Putin and these strategic decisions he's made that were strategic, I put a parenthesis around them because I'm not sure they're going to turn out to be smart in the long term, is that by the same way the Russians, you know, learned a lesson when they have tried these dedicated pipelines to a particular market in Europe or in Turkey, and then suddenly no one wants to offlift the gas, and they're left with an empty pipeline. They didn't want to be originally didn't want to be having a pipeline to China, stopping in China. Because then if the Chinese say, hey, you're giving us, we want this gas for $1, you know, what's your choice? Because you're just locked into this pipeline. You're worse off than you are, you know, because you can't go to the open market. And the Russians have had to capitulate on almost everything that they've always said they wouldn't do to get the Chinese to give the geopolitical appearance that they're siding with the Russians. But I'll tell you something just in a personal opinion, which is that if you're China or Japan or any country that's going to take supply from Russia, and you see what happened 2 weeks ago or a week ago with Poland, right? I mean, what does it mean to be an energy buyer from Russia if there are strings attached? And what are the costs of those strings? Is the cost of those strings that we don't like the way who you picked for the head of your country in China, so we're going to cut off your energy supply until you move it around? I mean, if you're China, it doesn't matter whether it's the, you know, Communist Party that's voting who's the leader, or whether it's, you know, people going to a polling booth, right? The bottom line is you don't want another country dictating who you have in your leadership or what your foreign policy is by threatening to cut off your energy supply. So the Chinese have the same exact concerns as a Germany or the Ukraine or Poland or the United States. They have the same exact concerns. And believe me, no matter what they stand up and say for geopolitical strategic reasons in dealing with the United States Asian pivot or helping on other issues where they have a strategic interest, don't kid yourself into thinking that the Chinese are not deeply concerned about whether Russia could not be a reliable energy supplier, because they do.
Perhaps I could add to that a little bit from the Russian perspective. I think that from Russia's point of view, that, as Amy said, they really needed the appearance of an alternative to the European supply, because Europe has got very clearly in its mind the unreliability of Russian supply to that particular market. And that really fell into China's hands. And I would return to Amy's point that China really is much more in the driver's seat here. And for example, the fact that the pricing has not been divulged can only mean that it is not a very agreeable set of prices from the Russian point of view. And when you think of the long-term, when you think of the infrastructure implications of the Russia-China agreement, these are very long-term propositions and subject to a lot of very difficult questions ranging from the physical circumstances of the pipeline arrangements and the supply arrangements to the political uncertainties. Add to that, and we did have pipelines in our title, the tremendous shift in the Central Asian reality, where Russia used to be the dominant, indeed the monopoly, control of pipeline supplies from Central Asia. Now China has introduced an alternative for the Central Asians. So the picture from the Russian point of view is not an agreeable one. They're talking now about moving into Asia and the Pacific, but they're latecomers to that market. There are well-established relationships with Asian countries that do not involve Russia. Russia does have some with Japan, for example, but when you look at it comparatively, Russia has a long ways to go, and there's a real gap between the rhetoric of the new engagement between Russia and China and the reality that China is really in the driver's seat.
Can I add just one last point? these field developments in East Siberia and the pipeline infrastructure to move that gas to Asia, the LNG projects that Vladivostok and the others, these are wildly expensive items. There's no place for Russia to go for the money except China. The financing's got to come from China.
Yeah.
So they have made themselves deeply hostage to the tender mercies of the Chinese on this. They have nowhere to go. And this is why the U.S. and others have targeted the banking sanctions and the investments. This is just, unbelievable.
Let me add one more thing to it. When you go and study and model out, 20 years from now or 30 years from now, where all this oil and gas is going to go, this, as Mike puts it, these wildly expensive projects, what I tell you, my opinion would be, is there's going to be no market for them. Certainly in the gas, there's going to be no market for this gas, right? There's going to be no market for Russian LNG, in 2030. Really, it's not competitive. So if they lose they've already lost the first mover advantage. The viability of those projects is very marginal, right? And I would say, depending on what happens with tight oil across the world, and depending on whether or not, if you assume that the Middle East stays in disarray for 20 years, then there'll be a market for the oil from the Arctic. But if, I hope, we have a better Middle East 20 years from now than we do today, what you're going to have is companies developing resources. If the Russians manage to develop the oil resources in the Arctic, they're going to be coming out having spent billions and billions of dollars at a much lower oil price point, because demand will probably, in my opinion, not grow by the same extent that we thought, because we're having all these new technologies come in for demand management and energy efficiency, partly because of Russia's moves. So now if you're in Europe, whatever your policy was for energy efficiency, whether it was in the transportation sector or any sector, you got to double it, right? And you're going to have, 20 years from now, hopefully we'll have a better global climate agreement across the world, and that's also going to mean that countries have to focus more sincerely on lowering energy use, right? So when you put all those things together, the chances that there's going to be a highly commercial return to Arctic projects that will take 20 years to bring on, because they're going to take 10 or 15 years to bring on, I think is very questionable. And it's certainly questionable for the Russians, since they don't have good finance, they don't have cheap finance.
We have time, I think, for one last question, followed by one answer. Yes, sir. Right in the middle.
Hi, I'm Dan Millison. I'm an independent consultant. Ms. Jaffe, you hinted at the question I wanted to ask, which is that everyone seems to be assuming that this demand growth in China is just going to continue to go up. But 2 or 3 years ago in this room, I heard a gentleman from the Heritage Foundation say, China's economy will crash in 2017. You heard it first here. That was Derek Scissors. So I tend to reside in that contrarian camp that China's in this very difficult economic transition, and the economy is going to have to become incredibly more productive per worker, like 4 or 5 times over the next 10 to 15 years. You say there's 15 to 20 years from now, there's no market for Russian LNG coming out of East Siberia. I mean, where's the Chinese market going to be in 10 or 15 years?
Okay, 1 minute.
Okay, so I think, I think that what people are betting on is not the industrial sector, right? I think what people are betting on is the Chinese middle class. Like, how many people in the Chinese middle class will want a vehicle, and what will be the requirements for that vehicle? And that gets to policy questions. The major problem in China today is air pollution, right? And how are the Chinese going to address that? That question of air pollution is so severe. I mean, it could bring down the government, right? So the question is, how is that handled over time? Do you know what I mean? Is it do they have a Clean Air Act like LA? Do you know what I mean? I mean, I think that's partly why they came to the Air Resources Board of California for a joint venture. I mean, this is a severe and top priority for the Chinese government. And how are they going to manage that? And if they choose to manage that in a way that reduces interest in automobiles, then what you're saying is true, even without there having an economic collapse. Then this giant lineup won't happen because it's completely dependent on the transportation sector, in my opinion. Right? So I see that really has to be how tightly do they grab that policy?
Well, thank you, Amy, Bill, Michael, Jan, and thanks to all of you for coming out this morning. Again, the book is Energy and Security, Strategies for a World in Transition. And we have other talks coming during the course of the year. The next one, Jan, is going to be focusing on
North America.
On North America and the Arctic. So
in November.
End of November. Keep an eye on your inboxes for that. And again, many thanks for coming out today.
I might add that, yes.